let's be clear, Bitcoin is an international asset.
We are spending like drunken sailors.
Bitcoin is the only economic entity where the supply is unaffected by the demand.
If you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable.
Hello, my name is Andy Edstrom, and I'm happy to welcome you to the 18th episode of Scarce Assets, a show that examines scarcity, the most fundamental driver of economics and markets, and the scarcest asset of all, which is Bitcoin. It's great to be here with my co-host, Jesse Myers, and our guest, Avik Roy. One of the reasons I'm fascinated to talk with Avik is that he's already on his fourth career. He trained as a scientist and as a doctor at MIT and Yale. And then he worked in the investment business for Bain Capital. He started publishing on healthcare policy, first on his own blog, and then in the Wall Street Journal, the New York Times, the Washington Post, and a number of other great publications. And he actually became policy editor at Forbes as well. So meanwhile, he became a policy advisor to governors and senators and multiple presidential candidates. And he's now president of FREOPP, the Foundation for Research on Equal Opportunity. Now, he's also a senior advisor at the Bitcoin Policy Institute, and I first encountered Avik's work in 2021 when he published an article in National Affairs magazine entitled Bitcoin and the U.S. Fiscal Reckoning. Now, this article was so good that I printed it out and I gave it to my wife and a bunch of other people, and I told them they had to read it. I think it's a brilliant framing of how Bitcoin can be helpful to the United States and U.S. citizens, but I also think it's just one facet among many of Avik's much broader work on providing Americans with opportunities to lift themselves up. So I'm very happy to talk with him today about that. Avik, how are you?
Thanks, Andy. I'm doing all right. How are you doing?
Doing well. Doing very well. Thinking about that article 3 years ago and some of the seeds that I think it planted for recent policy proposals within Bitcoin. But I want to table that conversation for the moment. And I'd love for you to hit some of the highlights of your background and career and maybe weave that into how those events and activities and milestones brought you to founding FREOPP.
Well, you hit on a bunch of it. I think what's interesting for me, in terms of like, how did I get into Bitcoin? I've been fortunate to have friends who are in the kind of Austrian econ world very early on. So, I heard about Bitcoin from the beginning, but was just too intimidated by all the technical elements to get involved myself in those early days. And I had a pretty intense and busy career as a biotech investor, which took up all my time. Didn't have bandwidth to pick up new hobbies. And but as time went on, I felt like it was important to start building that uncorrelated asset, or at least then uncorrelated asset, into my portfolio, and did so at a scale that has worked out for me, and but still kind of kept that to myself, and just kind of what I found is that as Bitcoin became a more significant part of my own portfolio, I had to pay more attention to it, and as the regulatory radar, as Bitcoin kind of hit the radar of Washington more, I felt like a lot of the skills and professional background that I had became more useful to the Bitcoin community, and I wanted to try to be useful to the Bitcoin community by bringing that Washington experience into the Bitcoin community, and vice versa, to help Washington people, policymakers, and the like, and the think tank world, the conventional think tank world, understand why Bitcoin was not a passing fad, why it was going to be important and more relevant as time went on. And that's what motivated me to write that piece, Bitcoin and the U.S. Fiscal Reckoning, to help Bitcoiners understand why Washington was important for them to take into account. Back, 10 years ago, 7 years ago, 2017 was really when the SEC first started to crack down on crypto more broadly.
Yep.
But at that time, Bitcoiners had this kind of like, hey, we're not crypto, we're fine. The Bitcoin network will keep going regardless of what governments think, which is technically true. But I think my view was that it gave short shrift to the degree to which governments can make it hard for Bitcoin to be as maximally useful as possible. Take something as simple as in the US, technically speaking, if you want to pay for coffee with your Bitcoin, you have to file a capital gains transaction, every time you do that. And that's because of US tax policy, right? That has nothing to do with the functioning of the Bitcoin network. So that's a very simple example. I could give you 20 more examples of how laws and regulations in the United States make Bitcoin less useful than it could be. And similarly, for Washington, I think that they've generally seen Bitcoin, the standard view in Washington is Bitcoin is just something that money launderers and tax evaders use and criminals use. It's not something that anyone who has a sincere interest in money would care about. And I did my best in that article to explain to them why actually Bitcoin is an exit strategy for those who worry about the debt and the money printing that goes on to basically support the rising and growing federal debt. And so, it's you never know how anything is going to get taken, how people are going to take something when you put it out there. But I was certainly very amazed by and grateful for the reaction from guys like you and so many others in the Bitcoin community and in the Washington community. So it was worth the effort to put that piece together, and I've been working on what you might call a sequel to that piece. I'm on as you mentioned, I'm on the board of the. You mentioned that I'm a senior advisor to the Bitcoin Policy Institute. I'm also on the board of the Texas Bitcoin Foundation, and the Texas Bitcoin Foundation, which is led by Natalie Smolensky, is about to publish a book called the Satoshi Papers, and I have a chapter in that book called "Then They Fight You."
Perfect.
And this chapter, which we can talk about today, is basically about what you might call the sequel to this original article of the Bitcoin and the U.S. fiscal reckoning, which is, okay, let's say this fiscal reckoning actually happens. Let's say the U.S. does go broke. There is a fiscal and monetary crisis. Will the U.S. go the path of Latin America and say, okay, we're just going to crack down and establish capital controls and basically prevent, even more so than they do today, people using Bitcoin and converting the U.S. dollar to Bitcoin and vice versa? Or will the U.S. try to adapt to a world in which Bitcoin is a stronger and more widely used monetary mechanism than it is today? Will the U.S. try to adapt to that, much as some Latin American countries have said, okay, we're going to dollarize, and we're going to use the dollar as our official currency to kind of prevent our own central bank from making the mistakes that they are inclined to make? Might we just kind of take that out of our hands? So there's precedent for both, right? There's precedent for countries going the sort of Venezuela approach or the Argentina approach, pre-Malay Argentina approach. And then there's the precedent for countries taking the opposite approach, like, say, Panama, where they've pegged their currency to the U.S. dollar and kind of have outsourced, or El Salvador pre-Bitcoin, right? The old El Salvador in 2000 got rid of their own currency, the colon, and converted to the U.S. dollar. And that worked for them reasonably well from 2000 to, say, what was it, 2021 when they adopted the Bitcoin standard. So all to say that there are these questions. What is the U.S. going to do when people are increasingly fleeing to Bitcoin, assuming that does happen? And this article explores some of the possibilities thereof.
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
Please. So if I'm not mistaken, satoshipapers.org, you can find more information. But yeah, hit us with the preview, with the sneak peek on Then They Fight You.
So the basic thing I try to do in this paper is explore three different scenarios. what I call the restrictive scenario, the palsied scenario, and the munificent scenario. So you can kind of grade them sort of negative, very negative to somewhat negative to positive. There's not really a neutral scenario. It's more like a somewhat negative scenario. So the very negative scenario is a bit what I was describing just a minute ago. Let's say there's a crisis and the U.S. says, you know what? We're going to respond to that crisis by completely cracking down on Bitcoin because we see people fleeing the U.S. dollar for Bitcoin, and we're going to prevent that, kind of like Roosevelt did in '34 with the executive order on gold, or China and other countries do today, where they say, look, we're going to basically shut down the exchange of U.S. dollars for Bitcoin, which they can do. They can shut down. They can say to Coinbase and Kraken and all the big exchanges, you're not allowed to convert U.S. dollars to Bitcoin and vice versa. They could, for example, say, if you want to own Bitcoin, you have to do it through ETFs, which we can regulate. You can't own the Bitcoin directly in cold storage. Of course, people might not comply with that, but they could say that it's illegal to have self-custodied Bitcoin. For example, they could crack down on the exchange of U.S. dollars for Bitcoin. They could force everyone to convert their Bitcoin into these ETF type products. They could do a bunch of things like that to basically make it very hard for people to own Bitcoin, and also maybe to convert U.S. dollars to other foreign currencies, not just Bitcoin, as a way of forcing people to own and save in the U.S. dollar, even though the dollar is losing its value. That's, again, exactly what we did in '34. Effectively, that's what we did in '71 when we finally broke the connection between the U.S. Dollar and the value of gold under Nixon. So we could have that kind of approach. We could do a bunch of things like that. And look, that would be hardly shocking at this point when we look at what happened during the pandemic, what happened during the financial crisis. We have so many examples in U.S. history, let alone in the history of other nations, where the emergency of an economic crisis. So again, let's go back to this emergency point, because I think Bitcoiners tend to understand that a future emergency or future crisis is possible. But for those who may think that's unlikely, or look, the U.S. has built this debt for a long time. Nothing bad seems to really happen. Is there really going to be a crisis? One thing I do in the paper is walk through my argument that we basically have about 20 years, plus or minus, before the math gets out of control with the size of the debt relative to our tax revenue, because we're already seeing the interest costs relative to our revenue and spending reach escape velocity. For the first year in 2024, how much we spent on interest on the federal debt has exceeded what we spent on national defense, which to me is a real threshold number.
Yep.
And again, if there's any crisis in the future, let's say China invades Taiwan or something else happens in the world, another pandemic or financial crisis, things get really bad really quickly. So if you think about the interest cost as something that can kind of run away from you, we're getting close to that threshold. So basically, I have young children. By the time they're in their 20s, we're going to be in a really tough spot where the debt to GDP ratio could be 400%. Right now, it's about 100%. The official government projections as to what the debt to GDP ratio will be in 20 years are very optimistic. They're based on rapid economic growth, steady population growth, interest rates remaining moderate to low. And if any of those things go wrong, especially the GDP growth, we're going to get crushed. And I think it's likely that GDP growth, economic growth, is slower over time than it has been historically, let alone at an above average clip, which is what the CBO projects. CBO projects 3.6% economic growth forever, which would be like Reagan-Clinton era economic growth. I just don't see it under an environment where we have this massive debt and the increasing regulatory burden and other problems that we have in this country. So the first part of the article really goes through the fact that the debt to GDP ratio is going to get far worse than what the Congressional Budget Office projects because of these factors where their projections are optimistic. And that's why we have about 20 years before things get really bad, in my view. Look, I hope I'm wrong, but this is what I see. And then if you project that, and then basically the article goes on to say, okay, in 2044, what are the scenarios? And let's say scenario number one is this massive crackdown that I talked about, the restrictive scenario where we're restricting people's economic freedom in order to protect the US dollar. Very easy thing to imagine, given, again, all the aggressive restrictions that we've endured in just the last 15 years of our lives between the financial crisis and the pandemic. So if that happens, now the problem is if that happens, it's a short-term solution, right? You're only going to encourage people to leave the US dollar if you're cracking down in that way. If the US decides that, well, we've got to prevent people from fleeing to gold or Bitcoin, then people are going to flee to gold and Bitcoin, right? They're not going to stick around because they understand that if you as the government are worried about them fleeing to Bitcoin, because then people are the market's going to look at that as you basically admitting that gold and Bitcoin, and particularly Bitcoin, are superior stores of value. So it will not solve the problem and lead to massive economic stagnation and crisis, and possibly even more dangerous outcomes. I mean, one could imagine the weakness of the United States at that time leading to a lot more war, a lot more violence around the world. Very unpredictable. We've taken for granted U.S. leadership around the world for the last 100 years or more, if you count World War I. So it's a pretty dangerous environment when there's a sudden shock and a sudden collapse. Let's hope that that isn't the outcome. So that's scenario number one. I can stop there if you want. We can talk about that before we get into the other scenarios.
Yeah, no, I think, the terms I always think of are in the interest of national security of the United States, all the things you just explained, right? It's Bitcoiners frequently underplay the possibility of this scenario. And, granted, things could get worse generally in order for that to happen. I always think of Executive Order 6102, and that, it took a depression, right, for that to get implemented.
But so this would be no different. Yeah.
Yeah, exactly. This would be no different. It absolutely could happen.
Yeah. So and look, I think yeah. So anyway, so that's scenario number one, and we'll get to how should we respond to that in a minute.
Please.
Let's go through the three scenarios, and we'll talk about the real takeaway of the article.
Mm-hmm.
So the second scenario is what I call the palsied scenario, meaning a kind of paralysis with various. As a medical term, palsy means this kind of paralysis with various kind of jerky movements here and there. And that's kind of like what the scenario would be. So imagine a world in which, you don't have the first scenario, like the aggressive government restrictions, but rather because of the polarized and distributed nature of power in the United States, you're not able to actually do a lot of the most aggressive restrictive things because maybe the courts strike it down, or maybe Congress is controlled by one party and the White House by another. And so they kind of argue with each other, and the most aggressive restrictions don't get enacted. But at the same time, for the same reason, because of the polarization and the distributed nature of power in the US, neither do you solve the problem. You don't reform entitlements. You don't get the deficit under control. You don't do the things that we would need to do to actually fundamentally solve the problem. So you neither solve the problem, nor do you enact the most restrictive policies to try to stem the tide of outflows from the US dollar. So what happens in that case? Well, the outcome is still fairly negative, right? You still have capital outflows. You still have a lot of people leaving the US system, which would weaken the US and weaken the currency for those who are left holding the bag, so to speak. But you would have the ability to flee the US with your capital under at least more of an ability to do so relative to the first scenario, the more restrictive scenario. So still bad for America, but maybe a little bit better for people who are already in Bitcoin, in that they can have that escape hatch relative to the first scenario. And then the third scenario, what I call the munificent scenario, is one in which there's a kind of Millet type figure in the U.S. who's charismatic and maybe wins the presidential election of 2044 and says, hey, we have this crisis. We've got to do extraordinary things to get out of it. We're all going to have to accept some sacrifices, but we've got to do it to get the U.S. out of this ditch. and we're going to do it. And he gets elected on that premise and is able, through his mandate, his electoral mandate, to pass the kinds of reforms that would get us out of the ditch. And the way I describe the munificent scenario is much like a bankruptcy of a large company. It's not like the old Paul Ryan type scenarios from 12 years ago where you shave a little bit off Social Security here and you shave a little bit off Medicare there, and gradually everything over time gets back into balance. By 2044, we won't have the luxury of those more gradualist approaches. You're going to have to do some major surgery, and that will involve, in my view, a partial default on Treasury securities in exchange for entitlement reform. So you basically say to bondholders, you're going to get maybe 50 cents on the dollar, but we're going to do the things to Medicare and Social Security and everything else to ensure that this never happens again. We're going to put, kind of like if you think about the auto bailouts from the financial crisis, right? So GM and Chrysler went bankrupt. The owners of the equity and the debt took a bath, but they were able to use bankruptcy to rework a lot of their contracts with the labor unions and get back on their feet afterwards, right? That's kind of how a bankruptcy works. So similarly, one can imagine a bankruptcy of the United States in which there's this that you take a haircut if you're an investor in these bonds, which will lead a lot of banks to go under if they're too heavily exposed to Treasury securities. But by then, a lot of banks may not be heavily exposed to Treasury securities for the reasons we've just described, and we fix the problem so that we take this one-time haircut and we come out of it the other side. Which again is countries have done this. Countries have emerged from defaults in a stronger position with real reforms. So that's not. It sounds crazy, but it's not actually that crazy if you look at fiscal and monetary history in other countries. But I would have to say, of those three scenarios, the first one is the most probable because that's the one that you see most countries undertaking when they are in a fiscal and monetary crisis. So while we hope for the best, we've got to plan for the worst.
Yeah, it does kind of seem like the third scenario, while I think is probably the most prudent in terms of actually solving problems. It seems like the only example I can think of is Argentina after decades of suffering. Like to get the political will for the people to, accept tough talk as the prudent path forward rather than, buying into a delusion of invincibility that some politician is promising. It feels like you have to go through an awful lot of pain before you can get there. Do you think it's possible for the U.S. for the electorate to see that reason before, in advance of a lot of pain?
It's possible, but there are. The road ahead is not. There's a lot of risk and a lot of challenges that those of us who believe in Bitcoin face to get to that positive outcome. And I talk about some of these in the article. One of them is the fact that today, if you actually look at the distribution of Bitcoin wealth, it's very, very skewed to the top, right? If you were an OG, you were a miner, you have a lot of Bitcoin. And if you're a humble sat stacker who's putting $50 a month away, that's great. You should be doing that. But the amount of Bitcoin you hold relative to people who got in very early, obviously very different. I actually, in the article, I compare the distribution of wealth in US dollars relative to the distribution of wealth in Bitcoin. And the distribution of wealth in Bitcoin is much more skewed to the top relative to the distribution of wealth in dollars. Now, it's a little tricky to measure these things because some of the large wallets may be exchanges, and lots of people who have a lot of Bitcoin actually split it among much smaller wallets, especially because most of the cold wallets today encourage that kind of storage, right? So there's some asterisks, and people can quibble about the exact way you calculate this stuff. But I would say, given the latter factor, which is to say a lot of people own a lot of Bitcoin, actually split it up into smaller units, smaller holdings at different addresses, it possibly is more concentrated actually than we know based on wallet distribution today. All that to say that if there is a crisis in 2044, it's going to be very easy for a populist politician to say, attack Bitcoiners and say these Bitcoiners want to hoard their wealth, and they're the ones who are selling out your U.S. dollars, and they're selling out America to hold Bitcoin, and we got to stop them. You could imagine a populist politician saying something like that, and people really going after and targeting Bitcoin holders in that way. So one of the things that it's very important for Bitcoiners to do is to expand the number and volume of stakeholders who actually have a stake in Bitcoin's success, not merely by owning Bitcoin, that's also important, but it could also be through Bitcoin-based businesses like Onramp or many others, where you may not have a lot of Bitcoin, but if you build a great business that's part of the Bitcoin ecosystem, then you may also have a great stake in Bitcoin's success, even if your wealth is in a kind of fiat denominated format, such as an equity stake in a Bitcoin-based business, right? So it's really important for us to do everything we can today to encourage as many people to hold Bitcoin, so that if the government cracks down on Bitcoin later, you as a citizen have a stake in Bitcoin's success. That's one of the most important things that we have to do, and I talk about a number of others in the article.
Yeah, I love that perspective. I wonder, I'm a little more optimistic myself about the concentration issue, partly because I sometimes think in terms of adjusting for the size of the asset. In other words, I don't know, I think about NVIDIA stock or something. Like, how concentrated was NVIDIA ownership when NVIDIA was at $1 trillion market cap, which is roughly where we are on, a network value for Bitcoin. And I like to think that actually your average $1 trillion asset is still kind of concentrated in terms of its holder base. But I could be wrong about that. Do you have a finer view on that?
That's also a tricky one, right? Because, if you look at a 13F filing of, say NVIDIA, and the top shareholders are basically ETFs and things
True.
like that are indexed to the NASDAQ 100 or the S&P or what have you, which obviously most people have in their 401ks and their portfolios and things like that. So it's somewhat tricky, actually, to assess the distribution of ownership of those highly valued companies. And so, again, I think that's more true of large blue chip companies than it is of Bitcoin, because ETFs are at least in the U.S. context, a pretty new development. So we'll see, but it's going to be important, right? It's going to be important to expand. It's important for all of us to make it easier for people to buy and hold Bitcoin and to use it to pass it on to their relatives and not worry about losing passwords or private keys, things like that. And obviously there are people working on that, so that's great. Another thing that I would mention is it's really important to make the conversion of fiat currency to and from Bitcoin as resilient to government censorship as possible. So today, the conversion of fiat to Bitcoin is basically on centralized exchanges, right? But there are people working on using technologies like Lightning and Nostr and others. Is it possible to create peer-to-peer decentralized exchanges of fiat and Bitcoin? To me, that's arguably from a technological or technical standpoint, the most important thing we can do to make Bitcoin resilient to this restrictive scenario in the future. Because basically the real weak point of Bitcoin today is the fact that if you want to buy more Bitcoin with your fiat, you're dependent on government permission to do so. So if we can make the conversion of fiat to Bitcoin permissionless, then we're really off to the races. But we're not there yet. But I think that's something that I would love for the listeners of your show to invest their energy into.
Yes, absolutely. I agree with that. And I guess I have hope that, it is early days, and the tinkering that's possible will eventually cumulatively add up to some breakthroughs in that holy grail, really. And also going back to the distribution question, this is, I think you're right, that is probably the greatest risk for persecution for Bitcoiners. I do have hope, though. The historical analog that I found very helpful, and I wrote an article about this, was the California ranchos. So the California rancho system was how Mexico parceled up Southern California to friendly landowners, 10,000 acres at a time. And that's how all of Southern California was divided up 150 years ago. And now there's basically none of those anymore, because they've all been parceled up and distributed by generations of the descendants who were looking to cash in some of the appreciation and the value of those land holdings. And so in that way, we have this nice historical analog of real estate on the frontier does distribute over time after its price appreciation, is due to be captured, and you diversify into other assets. So that gives me hope in the long term. But I think in that 20-year timeline that you're specifying, it is a little dicey.
That's right. I think it's a very interesting analogy, but we don't have 150 years under my thesis, right? We have 20 years. And those the people who didn't get the land in New Spain 150 years ago, they didn't get to vote, right? That was a monarchy, an empire. In our system, people who don't own Bitcoin get a vote, and rightly so. But that makes it more urgent to expand the stakeholder community. And again, it doesn't have to just be by owning Bitcoin. And you don't have to own a lot of Bitcoin to care about it. I think one of the insights of tax cutters in the 80s, for example, so when Ronald Reagan and Democrats cut taxes in the 80s, which was one of the first major tax reforms of the late 20th century, there were a lot of people who said, "Oh, this is not going to succeed politically because the beneficiaries of the tax cuts are going to be rich people." And so Democrats who opposed Reagan said, "This is tax cuts for the rich. It's really terrible." But what Republicans did, and the Democrats who worked with the Republicans on these tax reform, because they were bipartisan, what they did is they cut taxes for everybody. And so if you were a middle class person making $30,000, $40,000 a year and you got a tax cut too, you didn't care that the millionaires got tax cuts because you got one too. So you're like, hey, everybody gets a tax cut. I get one too. And yes, the dollar value of my tax cut might be smaller than the millionaires, but for me, that's real money. And so I'm fine. Similarly with Bitcoin, like you can, if you have a significant amount of your net worth in Bitcoin, but your net worth is, $30,000, then it's still meaningful to you and you have a stake in Bitcoin's success. So you don't have to, I'm not saying like you have to have this kind of Marxist distribution of an equal amount of Bitcoin for every person in the country. But what you have to do is you have to get people off zero. So you don't have to get them to OG level Bitcoin. You just have to get them off zero. You have to get them to a point where it's a meaningful investment for them. It's a meaningful mechanism for them to save money. And so that if the government is basically saying their hard-earned savings are going to be wiped out, then they're going to care.
Yeah, I think it's a really good point in pursuit of keeping America safe for both Bitcoin and Bitcoiners. Speaking of getting
America,
off,
right? Like part of the thing too is like it's not just about making America safe for Bitcoin. It's about helping America benefit from Bitcoin, right? Which is another part of this whole thing is can we actually get to a point where through this munificent scenario, maybe part of it is not just that we have this, structured bankruptcy with the entitlement reform, but you also promise to back the U.S. dollar with Bitcoin going forward so that investors in treasury securities in the dollar have that security in the future.
Yeah, so I'm glad you raised that proposal. You proposed it in your article 3 years ago. I think what you proposed was rotating some of the government's gold holdings into Bitcoin, a portion, a percentage. I want to say it was like 10%. 3 years later, multiple presidential candidates have talked about something along these lines publicly. And one U.S. senator, I think, has introduced a bill to this effect. Can you put a finer point on the idea, how you think it would be optimally implemented, in the face of some passage of time and some greater discussion on it?
Yeah, sure. So in that article, as you mentioned, we proposed that much like our analogy was simple. We have this massive gold reserve in Fort Knox and other places, and the Federal Reserve Bank of New York and elsewhere. We store the U.S. gold reserves. Why not say that 10% of the gold that we own, we convert to Bitcoin? That was the idea that we put out there 3 years ago. And look, there's different variations on the idea. You could say, well, we don't have to sell the gold we have. You could just say analogous to the gold, we just add in some Bitcoin. That's one way to do it. Another idea is, well, the U.S. government, the federal government, is already one of the largest holders of Bitcoin in the world because of all the Bitcoin it's confiscated from criminals. So just don't sell it. We tend to auction off the Bitcoin that we seize, for example, from the Silk Road seizure and things like that. You don't have to auction it. You can just hold it. And that's another idea out there, right? So there's a number of different variations now that since that original concept was thrown out there that people have iterated on. And I think these are all interesting and useful ideas. I think, if you just say, let's not sell the Bitcoin we get through these kind of criminal proceedings, but we also try to strategically build a reserve with that goal in mind. I think that's all very useful. I think there have been some overly optimistic claims about how a Bitcoin reserve could solve the debt crisis. Unless Bitcoin goes to like $1 billion a coin, you're not going to be able to solve the debt crisis by simply holding Bitcoin. You still have to reform the fiscal structure of the U.S. where we spend more than we take in every year. So even if you somehow wiped out the debt, of 35 trillion of debt, we're going to accumulate another several $100 trillion of debt in the next 20 years. So 35 trillion isn't going to be enough. So to those people who've argued that we can just wipe out the federal debt with a strategic Bitcoin reserve, I would say the math doesn't get us there, unfortunately. But
Avik, I'm shocked you're saying there are Bitcoiners out there who are overly optimistic about the power of Bitcoin to solve all our problems.
You look, I mean, I appreciate the enthusiasm for sure, but for those of us who are trying to think hard-headedly about this dangerous scenario in the future, we've got to be sober about it, and we've got to realize that it's not going to solve all our problems to have a Bitcoin reserve. And to the degree we want to persuade skeptics to take on this idea, then we got to not oversell it, right? We got to be realistic about it. And what's the realistic benefit of having a strategic Bitcoin reserve is that it strengthens the U.S. balance sheet. It makes us a little bit more resilient to problems. If there is a crisis in the future, we have a little bit more leeway in how we deal with it. Maybe a little bit more runway. Maybe we don't have to, crush. We don't have to have as severe an austerity plan and things like that. The austerity plan will still have to be there, but it may be less severe if we have a Bitcoin reserve. So it's the more we do it, the better it is. But if we don't fix the runaway costs of Medicare and Social Security, a Bitcoin reserve at the scale we're talking about is not gonna solve the problem. Again, unless Bitcoin really explodes in a way that I think even the most optimistic Bitcoiners at this point are not anticipating.
Does your Bitcoin custody setup keep you up at night? Maybe you still have coins sitting on an exchange worried about hackers. Or maybe you've set up your own self-custody but don't feel safe with your Bitcoin savings stashed on a little plastic device in your desk drawer. Gain peace of mind with Onramp and our multi-institution custody solution. Here's how it works. Onramp creates a dedicated multi-sig vault just for you. 3 separate institutions each hold a key. Onramp, BitGo, and CoinCover. But none can move funds unilaterally. Instead, only you have control over your coins. With Onramp's multi-institution custody, you'll sleep better at night knowing your Bitcoin is stored with best-in-class security on-chain with fault-tolerant multi-sig. If you believe your Bitcoin is going to be worth a lot someday, don't jeopardize that future by exposing your coins to hackers on exchanges, $5 wrench attacks in the real world, or perhaps most importantly, the risk that you might screw something up with a highly technical self-custody setup. Onramp's multi-institution custody eliminates single points of failure, reduces your personal attack surface and technical burden, and provides access to financial services that allow you to confidently secure your Bitcoin, including inheritance planning, insurance-backed warranties for all balances and transactions, low-cost trading, and more. Bitcoin is a once-in-a-species asset. Secure it right. Learn more at onrampbitcoin.com. I think the math, I think you were right. It's literally $1 billion if you add 220 trillion in unfunded liabilities and 35 trillion in hard debt. That and the U.S. ends up with 1% of the Bitcoin. That'd be $1 billion per Bitcoin.
Right.
So that's not going to happen.
Yeah, I mean, look, again, we can, in a sense, we those of us who hold Bitcoin, you could think, oh, yeah, that's great. Bitcoin is $1 billion a coin. I'm rich. But if Bitcoin's $1 billion a coin, that means civilization has collapsed, which is not good. So, in a sense, we should be careful what you wish for, effectively, with that scenario.
Yes, indeed. I wonder, have you thought about a timeline for adoption? One of the things I think about, well, first of all, 20 years. I hope we had that long in terms of the reckoning.
We may not. We may not.
Yeah. I've sort of thought in terms of 10 years, but I hope you're right. I guess with respect to government policy in Bitcoin, should there be sort of a timeline, a multi-year evolution, either with respect to the reserve or other policy? I mean, is time on our side with respect to not making big, jerky, palsy-like movements?
So one of the things I think I put this in the article, and if I didn't, we can talk about it here, which is that that 20-year time horizon is assuming no other dramatic crises. It assumes less robust economic growth, slightly higher interest rates, optimistic population growth. So pretty, it involves slightly less optimistic projections than CBO, but not like super negative projections. Yeah. But imagine there's another pandemic or financial crisis or war, which requires us to spend a lot of money that we don't have above and beyond current law. That then accelerates a crisis. I think the COVID really did that for us. I mean, COVID pushed the timeline much closer to us in terms of a fiscal collapse because we spent $6 trillion. We didn't have the monetary inflation was massive during that period, another $6 trillion in monetary inflation or more. And so this COVID period really did a lot of damage in terms of pushing all these timelines upward. And there is absolutely no guarantee that we won't have further crises in the future in which we say, well, this time is different. We got to throw money at the problem. We'll deal with the consequences later. And we just never do. We just never do.
Yeah. As like the BTFP a year ago or 2 years ago would suggest.
Yeah. And, look, I mean, I think it's hard. It's hard always to project these things, right? I don't think anyone could have predicted the exact trajectory of the way Bitcoin has turned out the last couple of years. I know there are people who think they've got a magic formula that predicts exactly how the price cycles of Bitcoin work. But empirically, there's a lot of reason to argue that those relatively simplistic formulas are not actually what we're observing. And the ETFs, I think, are a real game changer in that regard because the ETFs lead to a very different market behavior for Bitcoin than what we had before ETFs, just because of the mechanics of how you maintain the ETF peg and the hedging strategies people use and the arbitrageurs who try to basically make sure that ETFs are hewing to the actual Bitcoin price. There's a lot of stuff in the guts of the financial system with that really starts to transform the way Bitcoin is bought and sold.
Yep. All makes sense. Well, let's, I think, maybe pivot the conversation a little bit here, Avik. I want to talk about FREOPP. I want to talk, if you could give us a little bit of history as to how you focused on freedom of opportunity You mentioned the influence of friends who were big on Austrian economics, perhaps that played a role there. But can you tell us about how your thinking evolved, and then tell us about the organization's focus and activities today?
Sure. So it's related to the conversation we've been having, which is if you understand that we have a debt crisis, it's getting worse every year. How do we solve it?
Hmm.
Well, you're not going to solve it through a kind of Ayn Rand approach where you say, you poor people have to take your lumps and we're going to cut off your Social Security and Medicare. That's not going to fly. People aren't going to vote for that. Politicians who depend on voters' support are not going to vote for that. So you can't have that kind of approach if you want to solve these problems. And for too long, the narrative and the conventional wisdom has been you have to aggressively harm vulnerable populations in order to solve the federal debt, to take one example of many issues. And my view, having been in the wars on healthcare reform and fiscal policy, is that unless you can reform entitlements in a way that protects and advances the economic interests of lower and middle income Americans, you're never going to have the votes for meaningful reform. And you may, you can like that or not like that, but that's just a reality. The reality is it's just never going to happen. You're never going to get 60 votes in the Senate, so long as we still have a filibuster. You're never going to get 60 votes in the Senate, let alone 50, for a policy that the majority of Americans feel is not in their interest, where you're perceived fairly or unfairly to be throwing granny over a cliff. So you've really got to solve for that. It's an engineering problem. You've got to solve for how do I reform these entitlements in a way that protects the economic security as much as possible of lower and middle income Americans. And that's not just true of entitlement reform and fiscal policy. It's true of almost every issue. If we want a freer economy in which people can build great businesses and have better job opportunities and wage growth and better educational opportunities, all these things can be advanced through more economic and individual freedom. But too often, people in politics and also in the Bitcoin community have this kind of attitude of just leave me alone and let me keep my stuff, and you take care of your own problems. Don't bother me with your problems. And that, I understand that as a point of view, but from a political standpoint, it just doesn't work, right? The people who have the problems are not going to buy that. They're not going to buy that if you want to be left alone, that's okay with them. They don't want to be left alone. They want someone to help them out. And so you've got to come up with a strategy for dealing with that. And so the idea behind FREOPP was there's so many issues where the pro-freedom solution is the one that actually disproportionately advances the interests of people on the bottom half of the ladder. Economic and individual freedom have been the greatest engines of economic equality that the world has ever seen. That's why America is the richest country in the world, where people with humble origins can have incredible success. These stories continue to emerge every single year. There are new stories of people with humble origins who do incredibly well here. And that's not true in systems where you can't get your business off the ground or you can't get your career off the ground because of restrictions and cronyism and bureaucracy. So we have to, those of us who believe in economic freedom, if we don't lead with how that economic freedom is going to help people on the bottom half of the ladder, we're not going to have the public support for the kinds of reforms that can unlock the economic and financial growth that we all want to see. So the basic idea behind FREOPP is the most progressive social and economic and political outcomes are the ones that rely on individual and economic freedom and marshal them in the service of people on the bottom half of the ladder. So FREOPP, the Foundation for Research on Equal Opportunity, was founded with that spirit, where every issue we work on, every issue we do research on, every issue we publish a white paper on, we center our arguments around how economic and individual freedom, technological innovation, and pluralism can advance the interests of Americans whose incomes or wealth are below the U.S. median. And if it doesn't meet those two tests, we won't work on it. And in that way, we really try to identify things like, how do you deal with the rising cost of housing? Well, let's start by, making it easier to build more housing. Let's challenge the Federal Reserve, which by keeping interest rates at zero drives massive asset bubbles, including real estate bubbles. So more economic freedom through sound money and deregulation can lead to more affordable housing. Same is true with energy. Same is true with healthcare. Same is true with all sorts of things that right now, through barriers to entry, through regulation, through subsidies that are unwisely designed, we make these things more expensive than they need to be.
Yeah, I really appreciate your pragmatism with respect to you got to get things past the voters. I shouldn't say you got to get support of the voters is really what I should say.
You got to respect that they're making rational decisions. If you're telling them that in order for financial markets to work, I've got to screw you, they're going to be like, well, I don't care about financial markets. I care about, am I going to have health insurance? Are you going to take my Social Security away, the thing I rely on? I'm retired,
Yep.
People are going to be very concerned about that. So you've got to address those needs. And look, it's not that, people haven't been trying, but I think our argument is that trying is not enough. You've got to lead with that. You've got to make that your North Star with everything you do.
And is there a particular area? I mean, you mentioned a few. You mentioned housing in particular. Is there an area that's most actionable, either most actionable in the near term, or has such a huge magnitude potential of impact, that you're really focused and interested on that area in particular?
Well, we have issue areas that address each of those questions or each of those buckets. To take the last one first, I think healthcare and entitlement reform is the one where the scale of the problem is so large because it's the biggest driver of our deficit and debt other than rising interest costs, that any modest success, any modest reforms in healthcare have, just because of the law of large numbers, we spend $4 or $5 trillion a year in healthcare. And if you just fix it a little bit and you save a couple $100 billion, that's real money. So healthcare is one where the scale of the problem is such that even modest improvements can make a big difference. And so we do a lot of work in healthcare. An example of an issue where we think we're making real progress is housing, where actually there's a progressive movement towards deregulation of housing construction called the YIMBY movement. That's very aligned with everything that we've been talking about since we started FREOPP in 2016. An issue that's kind of in between, where the scale is very large and we feel like we're making a lot of progress in terms of implementing reforms, but we're not there yet, but we're very close, I think, is higher education reform, where Biden's approach is, let's deal with the high cost of higher education and the student debt problem by just bailing the students out and forgiving the debt and putting it on the taxpayer. Well, that's a terrible idea because, first of all, it's profoundly unfair because it's the top third of the income distribution that goes to college and goes to grad school, and the bottom 2/3 don't. So it's highly regressive policy. But more importantly, if you bail out these loans, then colleges and universities say, this is great, I can double my tuition, and it doesn't matter if people can't pay me back because the taxpayer will be on the hook for the remainder. You're incentivizing higher prices by bailing out the universities. So what we really need to do is completely reverse the incentive structure, where we say to universities, if the return on investment for that degree is negative, meaning what you pay up front in tuition and room and board is more expensive than what you're going to get back in terms of increased salary for getting the degree, that we shouldn't be subsidizing that through subsidized student loans and other forms. We should be telling that university or college or institution of higher education, we're not going to subsidize that. If a student wants to do that on their own accord, that's fine, but taxpayers shouldn't be expected to be on the hook for a $150,000 master's in film studies at Columbia, where the graduates are working at Walmart afterwards and making minimum wage. So so we've actually pioneered something where we actually have a searchable database at our website, where you can literally look up for every degree program in the United States, whatever major it is, whatever kind of degree it is. It could be a vocational degree, it could be medical school, it could be college, whatever it is. you can look up the institution and the course of study and find out if that degree has a positive or negative ROI. And our hope is not just that it's a tool for students and parents, but that policymakers can use that as a tool to say, you know what, we're going to stop forcing taxpayers to bail out colleges that want to overcharge for a degree that doesn't give you the economic return.
Wow, I love that. That's a very handy tool. I mean, how many young Americans, first of all, they're so early in their lives, they're making this giant financial decision that they're ill-equipped to make. How many would benefit from that ROI, return on investment analysis, to make a more informed decision about what's arguably for many people either the most important or maybe the second most important financial decision that they're ever going to make in their lives.
And what happens sometimes, the real tragedy is there are a lot of cases where somebody goes to college or trade school or what have you, and they don't complete it because of the financial pressures that they're under. Maybe you're a single mom and you're balancing having your kids with trying to get your degree done, and you can't get it done for one reason or another, or you have some economic setback in life and you drop out. And so you spent all this money on a degree you don't have. So you've taken on the debt, but you don't have the professional advantage that comes from having that credential. And there's a lot of people who fall into that bucket. That's the worst possible outcome. And you'll hear these university administrators say, "Well, you can't put a price on the education that we're offering," which is wonderful sounding, rhetoric, but they actually do put a price on it. They charge you. So if they are very capable of putting a price on it, they just don't want to be held accountable for the returns on it. And that's something that's got to change. And it's starting to change because we are at a point now where people who are graduating from high school are looking at the cost of going to these schools and saying, I'm not going to do it. And I think we're going to see, we're starting to see college enrollment is declining. It's peaked and it's declining for that reason. There's schools that are closing, and perhaps more need to if they can't get their costs under control. But our hope is that what colleges and universities start to do is say, you know what, we've been living high on the hog with these inflated tuition payments. We don't actually need that much. In theory, the cost of education should be crashing because of technology. You think about YouTube, you think about Khan Academy, you think about all these tools, Coursera, that people have to learn things that they couldn't learn before. It should be much less expensive to get a college level education than it is today. And we've just through government policy made it more expensive. So there's a lot of areas of public policy like that. Think about nuclear energy. We could basically massively slash our carbon emissions for those for whom that's a big concern. And this is relevant to the Bitcoin thing, right? So to the degree that people talk about, oh, Bitcoin is this energy hog, that only matters if you believe that consumption of energy is inherently a carbon intensive process. But it doesn't have to be. If we build nuclear power plants all across the country, we can generate more energy than we need with zero carbon emissions. We just have chosen not to do that. So this whole idea that somehow Bitcoin's energy consumption is a threat to the planet, it's only a threat to the planet because we've refused to build a high density, low carbon electricity grid using nuclear power. We could have done that 50 years ago. We can still do that. And a lot of our work in energy policy is showing that if you look at France, you look at Ontario, you look at places where they get a high percentage of their electricity generation from nuclear, they are zero carbon, they're carbon neutral today or close to it because of their reliance on nuclear energy. And in America, what we're doing is we're doing the opposite. We're closing nuclear plants. We close nuclear plants in New York, and the end result is more use of coal, which is just colossally dumb. Same with Germany. They're doing the same thing, right? So nuclear energy as a result, because we regulate it basically out of existence, or certainly new nuclear generation capacity, we've made it incredibly expensive to build new nuclear plants. It doesn't have to be expensive. It's only expensive because we've chosen to make it expensive because of the regulatory hurdles that we force nuclear generators to go through. So there's so many examples of what we can do to make America less expensive and more abundant and more competitive. And the good thing, the encouraging thing, is that some of these ideas are taken up by Democrats and others by Republicans. So this is not a partisan issue. We think, some people have a perception that economic freedom is inherently a Republican issue. I don't think that's really true today. I think there's parts of economic freedom that are embraced more by Republicans and parts that are more embraced by Democrats. And we take all comers. We engage everyone who's interested in our ideas.
Well, that's the right spirit. Make America's economy free again. I know you've got, in addition to the tools you mentioned, I think you have a conference as well. Maybe as we close here, is there anything else you'd like to talk about, either with respect to the conference or other activities that you've got going, and ways that people can support the effort and get involved?
I appreciate you mentioning the conference. So we're recording this in the summer of 2024. Every fall in November, FREOPP has an annual conference in Washington, D.C. at the Park Hyatt called the Freedom and Progress Conference. This year it'll be held from November 17th to 19th at the Park Hyatt in Washington. And we cover a lot of these topics of how to solve a lot of these seemingly intractable problems using economic and individual freedom and technology, including how to use Bitcoin for that purpose. You can learn more about the conference at our website at freopp.org/events/freedom-progress-2024. It's an energizing conference every year. It's so easy to get pessimistic and hopeless about all the big problems that we have, and we've talked about some of those big problems today. But you go to this conference and you realize there are talented people working on real solutions that can attract bipartisan support and get us out of some of these challenges that we have. And it's always an incredibly rewarding event with a lot of really incredible people who come. So if people are interested in coming, they're welcome to. And if you're interested in supporting our work, we certainly welcome that as well. We are a 501c3 nonprofit. We are supported entirely by donations. Another thing I'll mention that could be interesting to your audience is that we're producing a documentary that's kind of the movie version of Bitcoin and the U.S. fiscal reckoning, where we try to engage the popular audience, particularly young people, and helping them understand that these problems of the debt and deficit are the great social challenge of their time. Much like an inconvenient truth convinced people that climate was the thing they had to worry about 25 years ago when Al Gore made that movie. Our idea is, let's do something like that for the federal debt, where we show people why actually it's the federal debt and the fiscal crisis that should animate their political activism going forward. So the working title for the movie is The Buck Stops. And we're also taking donations to support the production of that.
Wow, well, that's incredible. I'd love to see what's going on with The Buck Stops. I'm wondering, what are you going to use for polar bears? You need a polar bear, like
polar bear in the sun.
That's a great
shrinking
question.
ice cap.
Yeah, it is really important, I think, with this stuff to not just inundate people with charts, but to give them the emotional power of what a debt crisis really looks like. And we are very actively that's a real point of emphasis for us. We want there to be emotional power to this film. We want people to really come out of that screening feeling like, okay, I know why this is the most important thing I have to do with my life, to the degree that I'm engaged in politics and advocacy.
Well, Avik, it's been a tremendous conversation. Thank you for your time. We're going to leave it there. I look forward to learning more about the film, checking out the conference, and I encourage our listeners to do the same. So thank you so much for coming on Scarce Assets.
Thanks a lot, guys.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.